Good morning, good afternoon, good evening, wherever you're watching me today. My name is Peter Ads. So, welcome back to Invest with Peter Ads. So, today I'm going to be talking about just like a review of what happened yesterday. The minutes of Fed meeting was released, and it's not really good, guys. I'm telling you, it's not really good. It's just that we just need to know that things are not looking good. And I read the whole thing and summarize it, and that's what I'm going to be telling you today in a couple of minutes. All right. So because there's a lot of them, but I just have to draft everything out. In like a pinpointing every topic, everything I need to talk about. So you'll be seeing me looking down, up and down at some point because I have to draft it out. It's a lot. If you see that document, you'll be like wondering. So it's a lot to digest, but I'm going to be telling us like what are the main things that we need to know, the important stuff that was said about, and the way forward from this. So, but in short, not to bore you, it's not really looking good at the moment. But things might change. But is what it is. Like I always say, 2022 is a defining moment for investors, and it's not really gonna be an easy sailing for us, but hopefully things can turn around. So I'll be going into that now. But if you have not subscribed to this channel, please kindly do that now. Like and put your comment down below if you have any questions. Okay, because as you do that, it's gonna help me. It's gonna help the channel to grow because I always bring this market review once or twice a week. Thank you very much. All right, before wasting our time, right? The Fed is telling us that inflation is higher than what they have previously expected. Most economics have been saying this, that Fed are not seeing the big picture. They are not seeing the real reason why things are not really going the way we want it. Fed believe inflation is lower than 6%, but most economics believe it's higher than 6% at the moment. So they are now realizing now that the inflation is higher than what they had expected. Are they for real? Well, another point is they said about they will now reduce the bond buying. We've been talking about, they buy 120 billion bonds every month just to sustain the economy. Now they see the economy is booming, but it's like a mirage. It's not real. The stuff that lies beneath is not really looking good. So they need to they are facing the reality now. See that they were like, okay, so they will be reducing the bond as earlier, speculated. So we've already discussed that earlier on. Anyway, so they will stop the asset purchase by March at an alarming rate. So they believe that from March this year, 2022, they will stop, at an alarming rate. They will stop buying all these assets just to sustain the economy. They're going to stop it at an alarming rate that is even higher than what we had previously expected. So the market went down yesterday just because, the market believed it's happening. It's going to come before the raising of rates and all that stuff, before lifting interest rate and, before they start dumping. But guess what? The Fed explained yesterday that they will be doing the three things: tapering, interest rates, increase rates, and also stop the bond buying. So three things they will be doing simultaneously, and market was not really expecting these. So market was like, it's going to be done, consecutively. Like, okay, we'll do the tapering first. Raise is going to be raised at some point, maybe 2-3 times this year. Then, and the bond buying will be reduced systematically. But the Fed is saying we are actually doing everything the same time. So we're doing it simultaneously, all around simultaneously. And market was like, what? What's going on here? So market, priced that in, and it went down straight away yesterday. Nasdaq was down like minus 3 point something percent yesterday. That's really bad. Another point I highlighted from that is they specify the rate that will be raised this year is going to be at least 3 times. They're going to be raising rates 3 times this year, and starting from March. So we expect one around March, first quarter, maybe one during the summer or something like that, second quarter, and last one maybe third quarter, something like that. But some people are speculating it's probably going to be 2 times. They're going to be raising it 2 times. They said in the Fed meeting, it was stated that they're going to be raising it 3 times this year. And guess what? 3 times next year and 2 times in 2024. Imagine that. So they will raise it 3 times now. 2023, they raised it again 3 times, then 2024. So expect a market slowdown at this point. Expect a market slowdown. If I were you, I won't be buying anything for now because it might be, I'm not saying it's going to be, it might be a slow, painful bear market. So if you start dishing all your hand in your pocket now and start lavishing your money in the market, you might probably hang at the end of the day, before even the middle of this year, you'll be there, regretting what you've done. So if I were you, I'll set the cash aside. I'll just hold on and see how everything plays out. I'll let the dust settle before I start putting my money to work at this point, because it's gonna be a slow process. When actually they'll be raising it 3 times this year. Whenever they raise it, market goes down like that again because interest rates gonna go up. So CPI, we don't even know what's gonna be released tomorrow now. So tomorrow is gonna be another day to for us to see what's gonna happen. So I would suggest that you probably just hold on and let the dust settle. Some YouTubers are already pumping. They're telling you to buy the dip. Do not buy it. I would suggest don't buy the dip at this moment. Let the dust settle. Let all this. Yesterday I was actually selling my green positions, taking profit, because there's no point waiting and looking at my profit getting shredded away, before my eyes, all because I want to be like I caught it at the lower price. I was really cashing out big and putting my money, on the side, just because if everything goes down, I'll be catching it at the bottom board. Nobody knows the bottom at this point, so you don't know whether the bottom is gonna be middle of this year or towards 2023, but just dollar cost average. All right. So, and also, this actually is going to affect the house market. Definitely the house price is going to go down. So if you probably bought your house last year or probably 2020, you bought at a high price. So you bought at the peak of the market, you're probably going to be in negative, for like a couple of years. So housing market is expected to fall this year. So if you're looking to buy a house, I think this is the season for you. This is time for you to be looking out for a cheaper house out there, because market price is going to drop drastically just because of that. And that's going to affect the world economy anyway, because US dollar is the world reserve currency. So expect this to reflect in UK, Germany, Hong Kong, most of these Asians, everywhere. All right. So market price, housing price is definitely going to drop. So if you're looking to buy a house, this is your year. From now up until 2024 is a good time to buy a house. But just still hold on. Just don't jump at this moment. Just hold on, wait. Let the dust settle, like I said earlier on. Let the dust settle. Let's see where everything is going, because it's just a minute. They released the minute, So it's still a written document. They've not, like Jerome Powell's not come out and say, okay, our minute was released so date, so that's the way forward now. That's where we're going. So let's just wait and see the way forward from here on. All right. So, but if you're looking to buy a house, keep piling in your money. It's your time. It's your year this year, right? All right. So towards 2024, from now, next year, 2024 is a good time to buy a house, because definitely expect at least a minimum of minus 20% drop in house price, just because of that, because it's going to really reflect in people, selling their houses, most people who have like 3-4 mortgage be selling their house, increase is high now, interest rate is up there, people, middle class struggling and all that stuff, it's going to affect everybody. That's just it. All right. So I will be, putting out my suggestions now, just for you to, if you're looking to buy some, some positions and all that stuff, I will put it. But whatever I say now is no suggestion to sell or to buy any stock. I'm not a financial advisor. Please take note. I'm not a financial. I'm just a random YouTuber, explaining how I feel, to my camera and to you guys out there watching me. So please don't buy just because I say you should go and buy. Do your due diligence, do your research, and get in at the entry price you probably want to. All right. So I believe, in this financial turbulence that we're heading to in 2022, the big winners are always the financials, the banks, the big banks, JP Morgan. In my previous video, if you go there, if you refer back to my previous video, you're going to see where I discuss about, the companies that do well during inflation. If you can check it out, I did a video maybe 2 weeks ago or something like that. So the big financial banks are going to be the one that will benefit a lot from this, hike rates and interest rate and everything that's going on this year in the market. So another one is the boring stocks, right? The P&G, Caterpillar, all these Walmart and all that stuff. So those are the boring ones that it's not going to move like J&J. Yes, all these big pharma, J&J is going to be up just there, and dividend stocks and companies with lower P/E ratio. And that's another one. Please do not buy a company with higher P/E ratio at this point, because it's going to inflation affect those companies, those sectors, very badly. So you don't want to be buying company with high PE ratios. You want to be buying dividend stocks and value stock that has lower PE ratio. Even Apple is going to get trashed. Though Apple is, like the other day, Apple is now the biggest company in the whole world with largest market cap, $3 trillion. Imagine that. That's what they call too big to fail. So I would say stay away from tech stocks and all these, big stocks with higher PE ratio. You want to stay away from them this year because everything is going to slow down. It's time for boring stocks, right? So you want to look at energy sector, oil and gas, and all sort of that. So that is what is going to be your safe haven this year, 2022 towards 2024. So I would suggest that just wait. Don't start buying. Market can go green today, but that does not mean we're starting to go back up. No, it's a mirage. Markets will always do. This big institution will do that for you anyway. They'll just pile in money. You think it's going to go up, but they'll pull the rug under your leg, and that's it again. So you don't want to be holding the bag. You want to fold your hand, let the dust settle, and see what's going to happen. Now, concerning the cryptocurrency, well, people were wondering, but people say crypto should be an hedge against inflation. No, that's no longer the case, because we have big institutions buying into cryptocurrency now. So what's really happening? Not what really happened. What is really happening is that big institutions, since they join us, retail investors buying these cryptocurrency, crypto asset, and all that stuff. So whenever they need big money, or they want to keep their money, or they want to put their money in the stock market or to work for them, they pull money from cryptocurrency, and definitely that goes down as well. And they put money in the stock market, or probably they just take their money out of both. So that's why you see, as market goes down, cryptocurrency goes down. Since the big institutions start buying into Bitcoin, that's the day Bitcoin no longer unhedged to inflation. So you need to understand this. So if market goes down 3%, expect crypto to go down 10-15%. So if you're into both, you're gonna feel it in your portfolio this year anyway, because they go side by side. So if market go down a little bit, crypto goes down a lot. So that is it now. Understand your entry point into cryptocurrency. If you're into cryptocurrency, don't jump in. Let the dust settle. Like I'm emphasizing, let the dust settle. If not, you're gonna be holding your back for 4 years before you can get a recovery. You're talking about 2025. So let the dust settle, because rate is going to be raised this year 3 times next year, and 2024 2 times. So if you buy at the top, guess what? Before you go green, or before you break even, you're talking about 2025. So be careful out there. Don't let anybody push you. Don't let any random YouTuber push you to buy anything at this point. Do your own research. The companies you think is going to do well, the company you've been looking at, get it at your own preferred entry point. All right. So guys, I'll see you on the next one. I don't want to bore you. I don't want to waste your time. I'll see you again next time. Bye for now.